Bitcoin is a money disruptor, and it's a disruptor
Yep.
in many ways, socially, it's economic energy. And I love Michael Saylor calls it that. It's
Yep.
economic energy in the purest sense. So you wrote this amazing article. I just read it last night, The Engineering of Bitcoin. So please take that and tell us what Bitcoin is to you.
Well, it solves a problem I've spent a lot of time working on in Wall Street, which is the settlement mismatch problem. There are enormous resources dedicated to solving the fact that the sender and receiver legs of a transaction don't settle at the same time. When you send money on Venmo to split a dinner check, for example, it shows up almost immediately in each other's accounts that a transaction happened. That's just the data leg of the transaction. But behind the scenes, the money leg is going to settle probably in 1 to 3 days. You see this with stock transactions, that the data leg goes near instantaneously at the speed of light, but the actual settlement of the trade is 2 days later. And Lynn Alden really helped me see that. I've been talking about settlement risk for years because I saw so many problems, that there were so many nefarious, but also just inefficient things that were taking place in the financial system due to the fact that transactions settle a day or two later than the transaction date. There are a lot of people who make a lot of money in that time frame. But Lynn Alden expressed it in engineering terms, and she connected a very, very interesting dot for me, which is, since the middle of the 19th century, when intercontinental telecommunications channels were developed and deployed, we've been able to move data at the speed of light, starting with Morse code, very simple data structures. But we have not been able to move money at the speed of light. And money was back then physical gold. And we started to develop in the financial system abstractions because there were more transactions than could settle the physical money leg of a transaction. And so the first abstraction was, well, let's not move the actual gold. Let's just move an IOU to that gold, a warehouse receipt exchangeable for that gold. And then it became, well, no, let's have money eventually just be an IOU to an IOU, which is where it is today. And over the ensuing 170 years, we've developed further and further abstractions. And here's the punchline. What Lynn helped me realize in physics terms is that the difference between data moving at the speed of light and moving at the speed of matter, all the abstractions that we've developed to solve that problem ended up pushing money itself into becoming an IOU. And that's the problem. We all know this is fundamentally an unstable system. You see it periodically with the 2008 financial crisis, with the repo market disruptions, and just recently this year with several bank failures. I believe more of those are coming. Interest rates can't be as high as they are right now, with investment portfolios of a lot of banks being so far underwater without more failures coming. But that's the point. When the entire financial system is layers of IOUs pyramided on top of IOUs, it's fundamentally unstable. And so while it might appear that the US dollar is relatively stable today versus other fiat currencies especially, it's not going to remain that way. All fiat currencies ultimately fail in history, and the US dollar will too. We just don't know when. When you have high inflation, that you start to have financial crises of increasing frequency and increasing amplitude. And there are also a number of head fakes. It's not, we tend to look at the hyperinflations on log scales, and it just looks like, a curve going straight up, and not straight up, but curved up and to the right at an exponential scale. But if you look at it in discrete time periods, it actually looks more like this, as opposed to just, a relatively smooth curve. And that's because there are enormous head fakes. that happen. And when the currency in Germany finally collapsed in its final hyperinflation, you saw 50% intraday corrections in the currency versus gold and in the currency versus stocks. The signposts you need to look out for that the system is dying are increasing frequency and increasing amplitude of financial crises.